Welcome to Explain the Charts, where we break down market movements for your favorite assets. Today is March 15th, 2026, and we are focusing on Litecoin, often referred to as the silver to Bitcoin's gold. Before we look at the candlesticks, let's review the significant news items affecting the LTCUSD pair. Institutional interest has seen a massive uptick lately, with the Canary Capital Litecoin ETF now actively trading on the Nasdaq. Furthermore, MEI Pharma has made headlines by allocating $100 million into a Litecoin treasury strategy. There is also increased utility through Coinbase, which now allows for loans backed by Litecoin collateral. This unlocks major utility for the asset by allowing holders to access liquidity without selling. However, it is not all positive, as founder Charlie Lee recently issued a warning about potential quantum attacks on older Bitcoin holdings. On the technical side, the market is currently navigating a period of lower volume and compressed volatility. The live Litecoin price today is hovering around $55.70 with a healthy trading volume. Looking at the daily chart for LTCUSD, we can see a broad historical context that reveals a challenging year for the asset. Back in December 2024, Litecoin was trading as high as $147 before entering a long-term bearish structure. This downtrend accelerated through 2025, with price making lower highs and lower lows despite the launch of the Spot ETF. The chart shows a significant resistance zone established around the $100 mark throughout last year. Every attempt to reclaim the triple digits was met with heavy institutional selling. We can see a significant support floor was tested recently in early February 2026. During that period, the price dipped as low as $45 during a broader market correction. This level served as a major reversal point, leading to the current corrective bounce we see today. The daily candles show that we have reclaimed the $50 handle quite convincingly. However, we are currently struggling to find enough momentum for a clean break above $60. Narrowing our focus on the period from early 2026 to the present, we can see the intensity of the February crash. On February 5th, we saw a massive red candle where the price dropped by nearly 14% in a single day. This move was characterized by high volume, suggesting a capitulation event among retail holders. Since that bottom, the recovery has been slow and steady, forming what looks like a rounding bottom pattern on the daily. We notice that transaction volume has been decreasing as we move sideways over the last few weeks. This convergence of declining volume and sideways action often precedes a major breakout move. The technical positioning suggests that LTC is currently range-bound below immediate resistance levels. Analysts are watching the $57 break as a potential trigger for the next leg up towards $70. If we fail to hold the current $50 support, the bears will likely target the $45 lows once again. The daily RSI is currently neutral, suggesting there is room for movement in either direction. The chart reflects a mix of institutional accumulation and retail indifference at these lower price levels. Switching to the 1-hour chart, the short-term market structure becomes much clearer for active traders. We can see that LTCUSD has been trapped in a narrow horizontal channel over the last week. The price has been oscillating primarily between $53 and $56. Every time the price approaches the $56 resistance, selling pressure increases significantly. This is evidenced by the prominent upper wicks on the hourly candles near that level. Conversely, the $53 level has acted as a reliable intraday support floor. Buyers consistently step in at this price, preventing a deeper slide for the time being. The hourly volume-weighted average price is currently serving as a pivot point around $54.50. Staying above this VWP level is essential for maintaining a short-term bullish bias. If we see an hourly close above $57 with expanding volume, it would signal a trend reversal. Until that happens, range-bound trading remains the dominant theme for Litecoin in the short term. When we zoom in further to the 15-minute chart, we can observe the micro-movements of the last 48 hours. We saw a brief spike toward $56.73 on March 13th. This spike was quickly sold off, creating a sharp reversal candle. This shows that there is significant liquidity and sell orders waiting just above the current market price. The 15-minute candles show a lot of indecision, with frequent alternating red and green bodies. This environment is typical of a market waiting for a fundamental catalyst to choose a direction. Traders should look for a breakout of this tight 15-minute range for quick scalp opportunities. A sustained drop below $54 would likely lead to a quick test of the $53 support. On the upside, reclaiming $55.50 is the first step for a move back to the range highs. The decreasing volatility on this time frame suggests a volatility squeeze is currently underway. To weigh our bullish and bearish cases, let's start with the reasons for long-term optimism. The approaching Litecoin halving in approximately 500 days usually acts as a supply-side catalyst. Institutional adoption and the presence of a regulated ETF provide a floor of legitimacy. The integration of MWB for privacy enhancements continues to attract privacy-conscious users. On the bearish side, the ongoing competition from faster altcoins continues to erode market share. The historical correlation with Bitcoin is also a double-edged sword for Litecoin. If Bitcoin enters a deep correction, Litecoin will likely suffer more due to its lower liquidity. We also have to consider the unrealized losses of institutional positions bought at $108. This creates overhead supply as those investors may look to exit on any significant rallies. Therefore, any recovery is likely to be a slow grind rather than a parabolic explosion. Let's recap the important price levels you should have on your radar. Our primary support levels are $53 and the major psychological floor at $50. On the resistance side, we are looking at $57 followed by the $65 zone. As for unbiased predictions, I believe a continuation of the sideways range is 70% likely. A breakout to the upside has a 20% probability if we see positive ETF inflow data. There is a 10% chance of a breakdown back to $45 if geopolitical tensions rise. Watch the $57 break closely, as that is the most likely trigger for bullish expansion. Stay alert for any news regarding the Nexus wallet or major exchange pairings. The absence of specific Litecoin news has contributed to this sideways trend, so any announcement could be a catalyst. We will continue to monitor the volume closely for signs of an impending move. Thank you for watching this in-depth analysis on Explain the Charts for March 15, 2026. If you found this information helpful, please like and subscribe for more detailed breakdowns. Always remember that the cryptocurrency market is highly volatile and involves substantial risk of loss. This video and the information provided here are for educational purposes only and do not constitute financial advice. Please perform your own thorough research and consult with a professional before making investment decisions. We will see you in the next chart analysis video. Until then, keep a close eye on those levels and trade safely.